disclaimer. Trading financial instruments carries risk. This material does not contain investment advice, nor should it be viewed as a personal recommendation, or an offer of, or solicitation to trade in financial instruments. Past performance is not a guide to future results.
Hello everyone and welcome to a new ATFX video. My name is Gonzalo Canete and I'm here to give you a fresh recap of the week so you can see access to the all details and start the week with a good update of what it was the last data, the situation of the global markets. We're gonna take equity, we're gonna take also fixed income, we're gonna take a look also on currencies, commodity and Bitcoin. So it's important particularly this week because we got on this week Federal Reserve speech on Friday night, which was Jerome Powell telling us that everything is going according with the plan, everything is going super well, even when we have seen yesterday Cascaris from Federal Reserve also suggesting that maybe we are gonna actually take only one interest rate cut this year or maybe non-interest rate cuts this year, which is something I have been suggesting in our previous reports since December. Since they announced the interest rate cuts, I was just telling you there is no macroeconomical data justifying the interest rate cuts in United States. And today, 5 of April, Friday 5 of April, by the time I'm recording this video, which is just evening on Friday, from London, which is like half season in United States, we have seen already the unemployment rate published today and the non-farm payrolls. Both of them super strong numbers, super good numbers. And remember, if the numbers are good, if the economy is going well, it's bad for Wall Street, because the market has been doing a bullish rally, a bullish trend since Jerome Powell mentioned in December the intention to cut the interest rates. Now, if there is no numbers, let's share the screen so you're gonna follow more or less what I'm saying right now. If there is no numbers justifying the interest rate cuts, there is no reasons to all the movement we have seen for the last months, which is mainly this movement since December. November we got the unemployment rate. Let me take also the pen for the whiteboard. So we got this movement caused by the unemployment rate spike on November, and we also got in December the words from Jerome Powell announcing the interest rate cut decision. By 2024 they will cut interest rates, and that was causing the super bullish market all the way up. And in United States could be understandable because United States economy is going well. They got an unemployment rate below 4%. They got a growth rate, the last one from Q4 was 3.5 and reviewed to 3.2% a few months later. So still they are growing. Even this week, the GDP now, the Atlanta indicator published from Federal Reserve Atlanta, trying to predict what is the growth rate of GDP and GDP on US economy. It was giving us a 2.5%, if I'm not wrong. I shared with you that on the report this morning on the blog, by the way. So you can actually go to our blog and you can access to the reports every day. You got not only macroeconomic data, but also geopolitical comments, commodity section. Absolutely everything is here if you want to go into details, right? But yeah, like I say, GDP now from Atlanta, it was giving us a projection of 3.5% of growth rate in the United States economy. Amazing comparing with the growth rate of European Union. Take a look. It's 0. I'm so sorry, but it's 0. And in the case of Germany, it's minus 3.30%. Sorry. In the case of United States, Q4 was 3.40%. And now, if the GDP now from Atlanta is right, will be 2.5% for the first quarter of this year, which still is good considering how it's going the European economy. Now, given that, if the economy is growing well, if the unemployment rate is still below 4%, and by the way, the numbers published today, it was 3.8%, the unemployment rate. Take a look at non-farm payrolls here, and the unemployment rate right here. 3.8%, even lower than expected. It was expected to 3.9 and it's 3.8. Non-farm payrolls, 303Ks. Bigger and better than expected, 212,000 non-farm payrolls. So again, labor market is still super strong and there is no reasons, if it's that strong, to cut the interest rates. They know that. Cascaris yesterday made a comment regarding in relation with this. even suggesting that perhaps there is, instead of 3 interest rate cuts this year, we're gonna see only 1 or maybe none, which is something I mentioned to you like a month ago. What if the Federal Reserve was wrong, and after all, they announced that there is no interest rate cut this year? What could happen? Well, I can tell you what could happen. If the movement on the market, the bullish movement on the market was caused by the... why I cannot close this tool? Well, it was done by the interpretation that the market was about to cut the interest rates. If after all they tell us that there is no interest rate cuts on the map, on the agenda, then obviously, in my opinion, the market gonna just drop, because all of this was caused by the expectation. And again, I was saying in the case of the United States, we could understand that because numbers are good, but in the case of Europe, there is no good numbers. The market has been rising since then. Take a look since November. First move and second move in December was amazing. This movement was caused by the Federal Reserve in European Union. Yes, by then in December, Central Bank of Europe was telling to investors that they were not even discussing the idea of cut interest rate in Europe. By then, it was not even on the table. And still, European market was rising like a rocket. Therefore, European market was rising based on the expectations of the cut from interest rate cuts from Federal Reserve, regardless what European Central Bank were doing. This is, again, the movement done since then. We have seen, and in my opinion, a movement that you cannot just justify by the numbers, because in this case, you are watching right now DAX 40, German index. The German economy is dropping, is weaker and weaker. Even today, we got certain numbers published, which it was the industrial, let me check, it was the factory orders from Germany, 0.2%. coming from minus 11.4%, and with expectation of 0.6%, so lower than expected and still super low in terms of how the economy is doing. And again, the growth rate of German economy is so low, you see it's completely flat even when it's not dropping. The last quarter was even in negative. So as you can see, the economy in Germany is not growing. So if the economy is not growing, why the equity markets are still rising in Germany? This is a very good question, and obviously there is no answer for this question. Therefore, it's because it's based on the expectations of interest rate cuts. I believe that if at the end, pay attention to this and keep in your record, in your mind, in your memory, this moment, this day, 5 of April, Friday, when we mentioned this. If at the end, as we suspect since December, there is no interest rate cuts, all this movement caused by that expectation could get lost. Okay, and if that's the case, I believe once the market start to discount that movement, probably it's not going to stop there. So we're going to see a strong correction on the prices. So be really careful with equity markets, especially in Europe. Okay, in the case of this, we can see the movement also caused in euro dollar. I promise you we're going to see currencies and bonds. So we're going to take a look on the DXY, which is the dollar index. And we're going to take a look also on 2 years bond, treasury bond in the United States, because both of them are telling us what is going on with the interest rate cuts in a different way, but we can read the language by these markets. Let's take a look online so you will see with a clear interpretation of what is going on. We have seen the market, dollar index was dropping as soon as Jerome Powell mentioned, let's move to 4 hours candles so you will see the evolution of all this week. Jerome Powell was mentioned that everything was going according with the plan and they're going to cut interest rates. Even when the dollar index was coming from here to here, mainly discounting that there is no faith on that interest rate cuts because the value of the dollar is rising regardless that announcements, which means like they don't really believe the interest rate gonna get cut, because if that will be the case, dollar could not rise in that direction. If you know that the interest rate's gonna get cut, you probably don't hold dollar positions, and therefore reserves in dollar probably will be liquidated or sold, or we will see certain movements between the dollar and other currencies, which is something which is happening with gold. but obviously the movement in dollar is not proving that. So again, Jerome Powell was mentioned this. Everything is on Wednesday. He said everything was according with the plan. They were planning to cut interest rates in the future, but it's still disappointing the market because it's not going with a particular dates, and the market was discounted even interest rate cuts for March. We are in April and nothing happened since then. So that's why I believe the market is not buying anymore these kind of promises. And today, after the unemployment ratio release, dollar was rising back again. I even post on X a screenshot of the market by then, and I show you how the dollar was rising. SP 500 was dropping, and we also got the bond. Let's take a look on the 2 years treasury bond, which is here. And you see it's rising back again. So Jerome Powell say we are serious, we're gonna cut interest rates. Now labor market is reinforcing again and it's coming back to the new maximums, which is 4.7% probably, the 75, the barrier, the frontier to pass to a new levels. We're coming from down here, which is when he promised the interest rate cuts since December until the end of February. The interest rates was below 4.50%. Once the market start to discount that this will never happen, we have seen how the price was coming up and down, and these movements was caused again by labor or by Federal Reserve comments. Labor data or Federal Reserve comments. Any data that is indicating that the economy is going well is going to push up the yield of these bonds. It's going to push up the XY, which is the dollar index, the value of the dollar, and therefore it's going to pull down the euro dollar. As you can see here, it's dropping in general terms since then. And naturally, even in long term, as I told you many times, if you check the macroeconomic data from European Union, clearly shows that is in the entry of a new recession, economical recession, but United States so far is still holding really good numbers from a macroeconomic perspective, lower unemployment rate than European Union, by far higher growth rate from compared with the European Union. So therefore, the economy is growing in the United States. In European Union is in contraction. The employment is full in United States. In European Union is 6 point something. We are far to be in the situation of United States. So the economy that is doing well is United States, and that's why I believe because of this flow of investing the cash, the money, the risk gonna move from euro to dollar. And sell your assets in euro and buy assets in dollar because US economy is doing well. It means a negative relation in euro dollar. And as you can see, you get 1, 2, 3, even almost 4, 5, and probably 6 resistance, turning the price down for the coming weeks or months, where we're gonna see euro dollar in a lower bearish trend, moving even below the parity and even below the last minimums reached on 2022. It's a strong bet I'm giving on the market. Maybe I'm wrong, but you can follow up the next weeks and see if we are not too far from this. And one more time, one of the market I was sharing with you since December, it was regardless what is going on, all the sectors was rising because the equity market was super positive. But I told you, be smart. Take a look on that sector that is highly discounted compared with others. That sector was oil and energy sector in US. I particularly give you a chart I said on social network, the screenshot of the chart of ExxonMobil, and I told you guys pay attention to those $96, $98 on ExxonMobil because it's the bottom of a really good channel, and with a very particular situation of oil prices. If the oil is rising back, and it cannot be forever in those levels, ExxonMobil gonna rise. And that was the chart I was sharing with you months ago, and this is what happens. By the time I mentioned this, we were here. So that was the situation of the market by December. As you can see, 14th of December, I was mentioned this for the first time in our reports, and I say pay attention to ExxonMobil, it's a very interesting company. Boom, amigos, we are there. We are reaching right now the target of $120, and it's even breaking up that target. Boom. Let me grab this one. Boom, 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 boom. So I will say that this was actually a successful story in terms of equity. Oil market obviously is rising. You got many factors I mentioned also in the daily reports, which is the Iran threats to attack or take revenge of Israel after the attack of Israel on consulate Iranian consulate on on Syrian territory. It was attacked by Israel missiles. Iran was promising to give certain actions in revenge during the next 48 hours. Even last night, with these videos were getting viral on social networks of kind of missiles in the sky of the South Iran. Some people thought that it was actually missiles. It was, after all, it seems to be an asteroid just crossing the sky. But it was straight in the direction to Iraq, and therefore, if it's crossing Iraq, it's just going to Israel airspace. That's what they thought, and it was a false alarm. Still, Israel is giving to all diplomatic personnel in foreign countries to pay specific security measures for the coming days, because they could suffer an attack. Anyways, that's if you want to go into details. Ukrainian war. The comments done yesterday by Sergei Lavrov, which is the ex-secretary of Foreign Relations of Russia and one of the highest diplomatics in Russia, saying that the relation between Russia and NATO has been dropping to the lowest level, and it means a direct confrontation. We have seen also the Israel and Gaza, the resolution from the United Nations saying like they need to stop immediately the attacks on Gaza. We got the Ukrainian war, we got the Iranian and Israel tensions just rising. Hezbollah, it's also involved there. Those factors, if you consider in this, is Russia is one of the main top 3 producers of energy in the world. Iran is one of the top 5, but it's also the main one who is controlling the exportation route of oil by the Hormuz channel, and therefore they promised it back in 2011 that if something happens, they could just cut the exportation routes from that to mainly affecting Yemen and Saudi Arabia, I believe, and that could just push the market of the oil prices super high, and that means inflation. So because these two wars, Ukrainian and Israel, could affect mainly regions that are related with the energy markets, the shock for the economy could be massive if something happens. And I think that's the reason why gold is boom, skyrocket, going to a new top records maximums right now, $2,327, and again doing amazing. So and you know, the particular or interesting point of this is we have seen a dollar rising because it's strong, relatively stronger for the previous 4-6 months, and gold is still rising. And this is a really weird situation, because usually when gold is strong, when dollar is strong, gold cannot keep rising. So we right now see a situation where gold probably is rising caused by the geopolitical risk internationally, and Asia mainly buying more and more gold. So it seems to be a consistent movement, not just a kind of flash movement on the price. This is passing a lot of days already about those top levels, $2,200. So this seems to be something serious. And Bitcoin is also doing really well. Just pushing once again the $70,000 barrier. So therefore I believe sooner or later the channel will get broke. Well, the triangle is gonna break up and probably continue the movement up to a new record maximum, right? Anyways, let's see the next coming days. I will see you in the next reports. And again, if you want to contact me, you want to request any particular market to be analyzed, or even you want to participate, or you want to invite me to any of your spaces, just please contact me. I'm completely open to collaborate with anything, with any other blogs related with financial markets, international economy, and so on. If you want me to add you to my newsletter, instead to go to the blog, you want to receive these reports on your email, are completely free. You can just send me an email. I will include you in my newsletter. And what else? I think that's all. Oh yeah, and of course, if you like this content, please give me the thumb up on the video and subscribe. Thank you. Bye bye.